Well, it looks like we got problems. We've got problems in private equity, private capital, as Blue Owl Capital, an American asset management company, is tanking and trying to figure out how to revive its own company. Hey, everybody, Economic Ninja here. I hope you are doing great. You know what's not doing great? Private credit. It's not looking good at all. We're going to talk about Blue Owl. We're going to talk about what's going on with them. We're going to be talking about all kinds of issues in the private equity, private credit markets that you're going to see implode more and more and more. We're going to go over that story right here, but really quick. Think about private equity. That has been a hot button topic for years now because that's where all of the business is going. Venture capitalists, our private equity, VC firms are buying up every business around the country. It's actually really sad to watch this happen. Just myself the other day had an issue with the plumber because I just wanted to get my toilet fixed. And you know what they want to do? They want to send out somebody to appraise the situation and sell you more products. I'm like, no, my toilet's broke. Yeah, but we got to send an estimator out. I'm like, no, I don't get it. It's leaking. I just want you to send someone. We don't have people like that because what they're trying to do is drain you of all your money. The appraiser wants to come in there and appraise, yeah, you got a leaky toilet, but you know what? You probably need a new sink handle too. Would you like one of those? Hey, how about a new shower fixture too? And they get 10% on top of that because these private equity guys have come in and destroyed small businesses. Type 1, if you know what I'm talking about. Type 2, if you're like, no, this is totally new to me, Ninja. Well, how does this play out in the real economy? Blue Owl Capital. It's a big deal because there's been a handful actually, of high profile bankruptcies, really starting in the auto sector, and it's getting worse and worse and worse. All right. Investors are freaked out and they can't get their money back. Isn't that interesting? Because most of them are accredited investors. I think all of them are. They should know the risks, right? There's a lot of risk going on. So let's dive into that. And real quick, I want to ask you this. If you take a look at the link below, I've got a couple of courses. I got all my courses, stupid amounts off. Try out a couple of these $9 micro courses in real estate. Go look at them down below. Get a feel for what it's like to invest in your own financial education. And I think that I can honestly make you a client for life if you'll check it out below. I have a weird way of teaching people how to make money through all kinds of things. But the link's down below, the timer's on, and it's going to be ending soon. And it is stupid low prices on my courses. But I wanted to do a couple of $9 courses to give you a feel for this. All right, so link's there. All right, let me do this. Let me pull up the story real quick. And this is exciting because as this industry collapses, and you're going to see it very seriously collapse in Q1 and Q2 of this next year, you're going to be prepared for it, at least mentally, because you're going to go, hey, Ninja told me about this stuff a few months ago. It's now happening. I'm going to save my money, not go buy those expensive purchases right now, and then we're going to go crush it in 2026. All right, so Blue Owl Capital, what's going on with them? A handful of weeks ago, Blue Owl started having issues when investors were sitting there going, we want our money back. We don't think that you have got, why's my computer not working? That figures. What do you want to update right now? I'm live. Type 3 if your computer never works when you need it to, but then all the other times it works and you're trying to show someone. All right, here we go. Yeah, that's what's going on. We're live. Ninja's dead in the water. Little circle thing. Stand by. We'll check to see if the power's on. Who didn't pay the bill at this hotel? Maybe me. Oh, yeah. Well, okay. Well, that's it. What happens? Now, for all of you watching later in the day, maybe tomorrow, maybe next week, just so you know, the Ninja makes most of his videos live because I want to be real. Blue Owl Capital. Let's start with the cell phone, because that seems to be working. Out of CNBC, Blue Owl considers reviving merger of private credit funds contingent on the fund share prices. All right, so what happened the other day? Hey, Hugh, You don't have to give me a super chat like that, but thank you so much. Um, Troy Black, I'll go watch it. I'll go check it out. Thank you so much for sharing that. All right. So okay, Blue Owl Capital. The other day or a little while ago, Blue Owl had an idea of merging a couple of funds together so that the fund would be liquid enough for investors to be able to pull out money. That fell through. But now it looks like they are considering reviving a plan to merge two of its private credit funds if the share price of the larger fund improves. See, everything's been tanking with this company because people are freaking out that they are where there's smoke, there's fire kind of thing. They're in trouble, right? It says this is an alternative as the asset manager, Blue Owl, evaluates its options after facing investor backlash against the move last week. The asset manager was forced to abandon the move to combine its publicly traded OBDC fund and Blue Owl Capital Corporation on November 19th after a plan to merge the two funds, freezing withdrawals from the smaller fund and offering its holders a price for the larger fund. This rattled investors. In a statement to Reuters, Blue Owl co-president Craig Packer denied that the firm was actively considering reviving the merger at this time. He said this was a cancellation, not a postponement. Well, Blue Owl, which saw a stronger reason for merging the funds, okay, and let me explain this. When it says they found a strong reason, it's because their company's going bye-bye. And to be honest with you, this is really exciting for me as we've been getting ready for these kind of events. As you know, you watch the bubble getting bigger, 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 and then the eventual, plateau, and then the pop. The pop never happens as it's going straight up. What happens is you start to see all these funds start having issues. So they start to plateau. People are putting less money into them. They can't keep the Ponzi going, and then all of a sudden, because of and I'm saying Ponzi because what happens is these companies invest in pretty risky assets and do some pretty crazy stuff with derivatives. And what happens is as investments start to slow, right, they can't do their crazy spending. Let me give you an example. How many people have watched The Big Short? Type yes or no if you've ever watched The Big Short. Pretty cool movie, right? It's literally a documentation with some comedy and drama of history, right, of financial history. There were conferences with mortgage-backed securities that this team, Michael Burry and his friends, were going to, and they were watching this. It was almost like the drill baby drill of mortgages. We're gonna finance everybody. We're gonna get them into negams. We're gonna get them into arms. Adjustable rate mortgages. We're gonna just blow out all this stuff. And they're like, there's no way that this can keep going. And these conferences were just a bunch of financial guys just roaring and yelling because they were out there making all this money, right? Well, that's what's happening right now. And so you go, okay, why is this a bad thing? Somebody just asked that right now. Why is this a bad thing? Well, it's because when these accounts, these companies that were just lending money, just not caring, not crossing their T's, dotting their I's, all of a sudden start to have problems. And what we just witnessed with a handful of auto part manufacturers that are going bankrupt, they're finding out that they were borrowing money based off of cooked books, faked information. What happens? The stock market starts to get rattled, and eventually it comes tanking down, just like 2008. And where, let's say, you have shares in companies that are now falling, that's bad, right? And there are a lot of people going, well, it doesn't matter, Ninja. I don't got shares in the stock market. Well, guess what? As everything starts crashing down, banks stop their lending. They slow down dramatically. They don't always stop, but they come up with reasons why they shouldn't give you, the average person, a mortgage, or you, the average person, a car loan. So now what happens to the real estate market? It tanks. There are fewer buyers because fewer people can buy houses. Fewer people can buy cars. So the car industry tanks, right? And there are people like, yeah, that's right. I want those low prices. Do you know what's funny about those people that go, I want low home prices. I want low car prices. Yeah. You know what's funny? If you don't have a stellar credit score, guess what? 9 times out of 10, you don't got the money to pay cash anyway. So you don't even get to take advantage of the low prices. And everybody, type 10 if you agree. This will affect eventually every single person. And the Ninja's got a point. Most people don't have the cash to buy a car or don't have the cash to buy a house. This is why it affects eventually everyone, but it affects everyone at a different point, right? This is why markets go up and markets go down. Now, when we're talking about this blue owl, it's funny, it's called blue owl because it's literally the canary in the coal mine of this current crash. When we had a big market correction, stocks and crypto back in, what was it, 2023, because of FTX imploding, and then it eventually came out to these banks, and the banks, we lost what, 8 or 10 banks, let's say, in that year. And a lot of people like, it wasn't what you thought, Ninja. It wasn't that big of a deal. There was way more banks that collapsed in 2008. Well, let me explain something to you. Those 7, 8, 10 banks that went down that year lost more money combined than all of 2008. See, right now, the Federal Reserve is out there bailing out banks right now. I'm afraid there is a bailing coming, but they're bailing out banks at a record pace, more than what they did in 2008. So what's going to happen next? So the question is, right now, there's all this smoke building up. There's issues, right? You haven't seen this full-blown announcement from Blue Owl that they're going to close their doors. They're just completely insolvent. Right now, they are trying to stem the tide, or put out these little fires, and in a way that it doesn't rattle the market. And what's going to be really interesting is, will the Federal Reserve need to step in there? Well, they're not obligated to. They have nothing to do with them, right? These aren't chartered banks or any of that stuff. But what they are going to have to do is ramp up the amount of money that they put into the markets. And I want to remind you of something that goes on down in the comment section. Anytime somebody mentions a cryptocurrency, they're usually trying to scam you and get you to buy that cryptocurrency in an exchange. Please don't listen to them. It's scary how many scammers are in these comment section, and how many people that watch this channel would gladly give somebody that they think wants to steal from them, but they think is me. I'll never invest your money. I got a hard enough time investing my own. So don't listen to them. Anyway, long story short, Blue Owl is going to be a big deal in the next few weeks, I think, especially coming into the next year. And there's going to be more private equity funds, more private capital funds that are going to implode too, especially after Q4 earnings come out. And a lot of them are sitting there with no pants on because the tide came out and figured out what was going on down below the surface. Look, if you want to check out the Black Friday sales, I'd love it if you check them out, especially those $9 courses, those little mini courses. If you're trying to sell a house right now, Home Seller Pro is one of them. I think you're going to get a lot more out of it than you expect. Try it out. I want to bring you a whole different type of financial education in 2026 because we're about to pivot, and that pivot's going to be massive, and it's going to be exciting when it comes to finance. All right, that being said, the Economic Ninja is out.